Hey guys, Jay King, Self-Made Millionaire, coming to you from MillionairePennyStocks.com. And today I want to show you an example of a trade that goes against us. A lot of times when we show stocks, we show people the gains that we're making. But I want to show you the flip side of some of these particular trades so it can help you. This particular stock found support today at 60 cents. And so it consolidated and stayed there for a while. So we decided to get in at 50,000 shares at around 60 cents. Now I want to show you something. When you go into a trade, you need to go into a trade with rules and with goals. And my goal for this particular trade was to dip buy at 61 cents. And I already knew if it dropped beneath that support level of 60 cents to about 58 or 59, that I was going to cut losses and minimize my risk at 59 cents. Now, when you're looking at these type of plays, understand if you're coming in with 50,000 shares, primarily I like to play these type of plays when the volume is much bigger. It's not enough volume really to buy 50,000 shares, but we're paper trading. Keep in mind we're paper trading at howthemarketworks.com. And so, but today this is what we did. We dip bought at around 61 cents and we cut our losses at 60 cents. Well, you may say, why did you cut losses so early? Well, first of all, remember now, the foundation of our trading is we trade price action, momentum, volatility, and volume. And if you look at this trade, right now I'm looking at this trade, and really this trade is not giving me any more price action. This is a level 2 chart, and let's see where it's at. It's back at 60 cents. And you know, this thing may originally break out, but I don't like the resistance that it's facing. And also too, when you're at a level 2 chart, and you're looking at level 2 chart, you begin to see the buyers and the sellers. The buyers are green, the sellers or the shorters are red. And this stock has been getting really crushed. A lot of sellers are coming into this stock, and I'm starting to see a lot of resistance in the 60 and the 59 cents range. And you can see a lot of sellers right here. One just sold 3,000 shares. This is a level 2 chart on E-Trade. But this is the reason we cut losses. And this is something that has to be done periodically. This is the reason why a lot of people can't stand the game, is because when they get into a stock, they don't have a plan. Now, keep in mind, if I would have bought 1,000 shares or 500 shares, then I would have waited probably until this stock bottomed at about 50 cents. But anytime you're playing these type of plays and you're going with 20,000 shares or 50,000 or 100,000 shares, then you have to have a mental stop loss or a stop loss set to minimize your risk. Primarily, I'm going to do about a 2 to 3 cents decline. If that stock declines 2 to 3 cents, this is only when I'm playing 50 to 100,000 shares, because keep in mind, once we got into this stock, it had already consolidated and found support at 60 cents. So if I buy at 61 cents, a limit order, and that stock goes at 59 or 58 cents and it declines to that price, then I'm out of there. And the reason why it's easy for me to minimize my risk and cut losses is, first of all, I'm paper trading, but I understand that this is a part of the game. Remember now, when you see stocks that have a small little volatile spread and they have a potential of breaking out, you need to identify the support and the resistance levels. That's very important. The support level is pretty much when a stock consolidates and it will not drop beneath this price. Now, we figured that if it drops beneath 60 cents, then we already figured out that we, going into this trade, that we would set up mental stop loss. I didn't set up an actual stop loss, but I knew as I was paper trading that I would cut my losses at 59 cents. And so that's just a 2 cents loss on 50,000 shares, which is about $1,000. Which, you know, when you're looking at the downside of it, it looks horrible, but it really is just a part of trading. And but if you look at the upside and this stock goes up 20, 30, 40 cents, then if it goes up 30 cents, you make $15,000 on the trade. And so on these type of trades, if you're building a small account, you need to, you know, buy maybe 1,000 shares or 500 shares and just be patient. You know, swing trading. You don't always have to rush trades. A lot of times when I'm trading, I'm trading on another level because I've been trading for a while. But understand that I understand how to grow a small account because I was there before. You know, when you start off with $2,000 or $3,000, you want to take small positions and minimize your risk if those positions don't go well. For instance, if you get in on a trade like this at 60 cents and you do 1,000 shares, if that trade goes against you and it goes down to 55 cents, then I would cut losses because it's already dipped beneath the support level. Now, if you choose to be a little bit more patient, you just have to be careful because that stock can go to 48 cents, 42 cents. And if you don't have a methodology of risk management as it relates to trading, then you're going to lose in the game, because that's the secret in becoming a successful trader, is to learn to minimize your risk. When you go into trades, don't get emotional. I don't care what the company says about their financials or what the company says about their future plans. Have a system as it relates to managing your risk when you go into trades. And I want to show you that this trade didn't work out for me. Notice it's back at 61, but I stuck with my rules. I said I don't care if it goes up to $20. If I get in at 61 cents, because that's the support level right now. And actually the support level was 60 cents. And the stock wasn't dropping beneath 60. So it dropped beneath 60 and I accepted it, and it went to 59 and I cut my losses. And it eventually went to 58 cents, but now you see it's back up. Now this stock can break out again. I want you to put this on your watch list. But in order for this stock to impress me, it's going to have to break its original day highs of 74 cents. And you always want to keep your eyes on stocks like this that have entered into new heights, because primarily the support level for this stock is anywhere from 43 cents to about 50 cents. So we see it has entered into a different range in a day high. So I'll be watching this stock, and if it can hold its gains and the volume can increase and it can start to uptrend, I may buy CYTR again. But I just kind of wanted to give you a quick example. If you want to learn how to paper trade, open up an account at howthemarketworks.com and start sharpening your skills as it relates to trading. I love paper trading. I've been trading almost 20 years, and I still paper trade every week. It sharpens my skills, sharpens my mindset, and it keeps me sharp. You know, I begin to recognize different patterns, and I'm able to go in, and I'm able not really to worry about whether I lose money or not, but I just want to really define my skill set and sharpen a lot of my skills as it relates to trading. So remember, the first step to trading is number one, learning how to focus on stocks that have price action. You don't want to sit around all day long for the next 20 years and wait for a stock to move, but you want to identify these stocks that have price action. And one good way to identify these stocks that have price action is every broker has something called tools, and within these tools are certain algorithms that sift out several different stocks to research. And so what we normally do is we click on research. If you go to E-Trade, you can see this. Click on market movers, and what it does is once you click on market movers, put this on the NASDAQ. And when you put this on the NASDAQ, from here, look at this. It shows you a lot of the stocks that have entered into new heights. So while AMD has broken 902, 903, it had a lot of resistance there. So while this stock is starting to break out, so we may paper trade this one. I've been having my eye on this stock, AMD, and this is starting to enter new heights. It's reported earnings, so this is a good stock to watch, AMD. So again, this is Jay King. I'm coming to you from MillionairePennyStocks.com. I'm looking at a level 2 chart right now, and this is starting to break out here. So this looks like this is a good trade. I'll be watching AMD a lot more. Again, this is Jay King. Have a great day. Bye-bye.